You may have heard the phrase closing costs from a lender or a realtor in discussions about the home loan process and wonder, what the heck are closing costs and how do they work? All right, so what are closing costs? Think of closing costs, whether you're taking out a home loan or whether you're paying cash for a house, you're going to have some type of cost associated with the purchase of real estate. If you're using a home loan, here's categorically what you can expect. Your lender is going to have certain fees. Those fees may include origination fees, discount points, a credit report fee, an appraisal fee, sometimes application fees. So that's what we're going to kind of call lender closing costs. The title or escrow company that you will be using, which is required when you're purchasing real estate, the title company is also going to have fees. So they're going to have a settlement or escrow fee, the title insurance fee, endorsement fees, potentially a notary fee. So that's kind of like another category of these closing costs. Sometimes there are transfer fees. You're going to have to settle up on property taxes. So depending on the city that you're purchasing a home in, there may be property related fees. Maybe those are HOA transfer fees. The property itself could have fees associated with the transfer of new ownership. So sometimes municipalities have transfer fees. So those are types of actual property related fees that you might have. You will also potentially have a home inspection or a home warranty. Those are other fees that kind of get all lumped into this big closing cost category, if you will. Now, if you're taking out a home loan, the lender that you're working with is going to be able to give you a very detailed summary of what these closing costs are going to look like. And if you are putting less than 20% down, the lender is going to require that you escrow for your property taxes and your homeowner's insurance. And on that note, your homeowner's insurance company is generally going to want to be paid at closing the first full year of your homeowner's insurance. If you're going to have your homeowner's insurance and your property taxes included in your monthly payment, then the lender is going to want to set up your escrow account, and you're going to have to pay 2 months of homeowner's insurance roughly and 2 months of property taxes that get deposited into that escrow account at close of escrow. So that's a whole lot, right? It feels like a lot of different numbers, and it is. But the lender that you're working with is going to be able to give you a very detailed summary about how all of these closing costs break down and where the money's going. I'm often asked if any of those closing costs are paid up front or if everything's paid at closing on your closing day. In most cases, all monies that are due on your closing day or potentially a day or two before your actual closing day. However, some lenders do have application fees that are due up front. Some lenders may charge an appraisal fee up front, meaning at time of service prior to close of escrow. So it's always good to be talking with your lender to find out, are there any upfront out-of-pocket costs due now, earlier, or prior to the actual close of escrow? Now, when we think about funds due on that closing day, those funds are going to be a combination of your closing costs that we just described, together with your down payment if a down payment is due on the loan type that you are applying for. Now, when we think about money that might be due up front, once you're under contract, it's very likely that you're going to have to put up earnest money. Earnest money are like good faith funds. And essentially what it's doing is telling the seller that yes, we're under contract and in good faith, I'm going to give part of my down payment, I'm going to give that upfront at contract acceptance. That's going to go to the title company or the escrow company. They are going to be the neutral third party entity that's involved, in addition to providing title insurance to ensure that you are purchasing a property free of any liens. They're also going to hold all the money and manage all the money on your home loan transaction. So your earnest money, think of it this way, it's generally 1% of the purchase price. So if it's a $500,000 purchase price, 1% would be $5,000. And that money would be due once your contract is accepted in most states. Now that money again is your money that is going to be applied towards your final requirement for down payment and closing costs. So let's think this through. Let's say that you are doing a 5% down program and the purchase price is $500,000. So 5% of $500,000 is $25,000. And let's say your closing costs are another $10,000. So total funds to close in that scenario could be $35,000. Now that earnest money, which is again due upfront once your purchase contract has been accepted by a seller, let's say that it's $5,000. You're going to give the title company $5,000. Those are your good faith funds, and that's going to come off of the final $35,000 in our scenario funds due at closing. So it's just advanced. It's your money. It's being applied towards your down payment and or closing cost. It's just paid earlier up in the process. Now, if you have negotiated to have the seller contribute towards your closing costs, that's perfectly acceptable in most cases. And here's how that would look. Let's say that your contract negotiations have the seller paying $5,000 towards your closing cost. And let's say your total closing costs were $10,000. Then essentially, now that credit is applied at closing, and so your closing costs go from $10,000 funds required by you to $5,000 in that scenario. Whatever the negotiated seller credits are will be taken care of at close of escrow on your final settlement statement, where all the numbers come together and you have clarity about line by line where all the money is going. I'm often asked, can closing costs be rolled into the home loan? And the answer is, on a purchase transaction, if you're purchasing a home, closing costs cannot be rolled in. However, remember that the seller can contribute towards your closing costs. Be sure to check with your lender, because each loan program is going to have a maximum amount that the seller can actually contribute towards your closing cost, and the seller contribution cannot be applied towards your down payment, just your closing costs. But again, those closing costs can encumber a lot of different things, as we talked about earlier on in this video. However, if you are doing a refinance, meaning that you already have purchased a home, you have a home loan, and maybe interest rates have dropped, or maybe you're going through a divorce and you have to refinance out of both parties' name into just one person's name. In a refinance type of home loan, those closing costs can generally be financed into the loan. So it differs, the answer really differs based on the type of loan that you're obtaining. Now keep in mind that if you are using a home loan to purchase the property, the lender is going to want to document all monies. So money for your down payment, money for your closing costs, where all those monies are coming from. It's required in the lending guidelines that a lender document it all. So if you can't document it, or you're feeling challenged about that, be sure to just have an open communication with your lender, making sure that they understand where that money is coming from. A lot of times gifts are involved, last minute. So maybe you did have the money, and then maybe something happened in life, because we all know life happens, right? Maybe the car breaks down, you got to spend some of that money. Maybe you're a little short on the funds to close, and maybe there's a gift that's involved. Maybe your relative or a parent or somebody like that's going to hop in and help you with your closing cost or your down payment. Just be sure you're having these conversations with the lender. The sooner we know about what's going on in your particular scenario, the better chance the lender is going to have to help guide you and make sure that there are no red flags or anything that happens to put you in a position where you can't close your home loan or that home purchase on time. My goal is to provide you with the important education you need and a jumping off point for you to feel confident as you move through the home purchase process, especially if you're taking out a home loan. Oh, and if you're wondering if you can use gifted funds towards your closing cost or down payment, watch this video where I talk in depth about gifted funds and how they can be used in regard to the home loan process.